Welcome to Market Momentum. Let's get right into it and break down the key forces that are really driving the markets right now. You know, with markets hitting these crazy new highs, the big question on everyone's mind is it too late? Have I missed the boat? So today, we're going to dive deep into the data and see what's really going on with stocks, crypto, and even precious metals. All right, here's the game plan. We're going to kick things off with that incredible rally in U.S. stocks and figure out if there's still gas in the tank. Then we'll switch gears and uncover a hidden engine that might just predict crypto's next big move. After that, we'll zoom in on some specific digital assets. And finally, we'll wrap it all up by looking at gold and silver to see if their amazing run is about to hit a ceiling. All right, let's get right into it. The Great American Rally. You know, it's funny. September is usually a pretty weak month for stocks, statistically speaking. But man, the U.S. market has been telling a completely different story lately.
And I mean, the strength has just been staggering. We are talking about a massive 30% surge in the S&P 500 from the lows we saw not too long ago.
And if you thought that was impressive, check this out. The tech-heavy Nasdaq, it's done even better, posting an incredible 40% gain in the exact same time frame.
And look, this isn't just another tech-led rally. We're seeing the Dow Jones push into brand new all-time high territory. That tells you just how broad this strength really is.
So this really gets to the heart of the matter for any investor, right? You see these huge gains, and the first question is always, should I sell? Is it time to take my profits? But here's the thing. When a trend is this strong, trying to fight it or getting out too early can be a huge mistake. The indicators are pretty much all saying the path of least resistance is still up.
Okay, let's switch gears and talk about crypto. Now, to really understand what might happen next here, we've got to look past all the noise in the headlines, and we have to follow the money. And I mean that literally. The key concept you need to know about is something called the Global Liquidity Index. Now, put simply, it's just a measure of all the money. We're talking US dollars, euros, yen, you name it, all of it sloshing around the global financial system. And honestly, it is one of the most powerful and yet most overlooked drivers of the entire market.
Yeah, the best way to picture it is like a global tide of money. And when that tide comes in, it lifts all the boats, right? It lifts all asset prices. But for some reason, crypto seems to be one of those boats that rises the highest and the fastest. And this is where it gets really, really interesting. There's a lag. It's almost predictable. The data shows us that when global liquidity goes up, the crypto market tends to follow, but about 84 days later. Think about that. It's like getting a sneak peek of where the market might be heading in a few months.
So what does that mean for right now? Well, it suggests that the next couple of months for crypto might be a little quiet, maybe even a bit boring. But the underlying conditions, they could be setting the stage for another big move higher towards the end of the year, especially if central banks keep cutting interest rates. Okay, so with that big macro picture in mind, let's zoom in a bit. Let's look at the technicals for some of the biggest names in the crypto space. So if we look at the two giants, Bitcoin and Ethereum, we're seeing a really clear divergence. Bitcoin looks technically stronger right now. It's holding its upward trend really well. Ethereum, on the other hand, is kind of stuck in a sideways pattern, just consolidating after that huge run-up it had. For Ether, that 4,550 level, that is the number to watch. It's the key hurdle it needs to get over.
And you know, that story is pretty similar when you look across a lot of the other altcoins. It's a very selective market right now. This is not one of those a rising tide lifts all boats rallies, where everything just goes up at once. No, each individual asset is facing its own unique technical challenges.
All right, let's pivot one more time. We're going from the new world of digital assets to the old world safe haven, precious metals. And the big question here is all about timing. Because for both gold and silver, honestly, the technical charts are flashing some pretty big warning signs. I mean, after these incredible, almost vertical runs they've had, both metals are looking really overextended. They're pushing into what analysts call an extreme or overbought zone, and all that means is that the rally might have just gotten a little too far, too fast. So what's the bottom line here for precious metals? It really comes down to risk management. Chasing an asset after it's gone straight up is a really, really dangerous game. If you're not already in, the smarter play is probably patience. Just wait for a pullback, wait for a healthier entry point. Okay, let's bring it all home. Let's tie everything together and talk about the key takeaways from all this analysis. All right, 3 key takeaways. First, respect the trend. The U.S. stock market has some serious upward momentum, and fighting that is usually a losing battle. Second, watch the liquidity.
That global liquidity index is a super important forward-looking clue for where crypto might be headed. And third, avoid FOMO. That's the fear of missing out. Chasing assets like gold and silver after they've already stretched this far, well, that's a high-risk strategy.
And that leaves us with one final thought to chew on. As that global tide of money we talked about inevitably starts to shift, the really big question is, which of these markets is going to adapt the best? Will it be stocks, crypto, or metals? Which one is going to prove to be the most resilient?
Hey, thanks so much for joining us for this market breakdown. If you found any of this helpful, do me a favor and hit that like button and subscribe. It really is the best way to support the channel. We'll see you next time.